welcome to another update about XRP. Here on the XRP chart, we have now seen the price reach this Fibonacci support zone and break above the first signal line to indicate that some kind of a low is in place. So let's talk about the structures we're tracking here. I only want to talk about the smaller time frame today. We are still firmly caught in a range, absolutely. The two bullish scenarios I'm tracking are shown here in white and yellow. You might remember from previous updates that there is, first of all, the yellow count, which is more directly bullish. And in this scenario, we're tracking a diagonal pattern to the upside, and this is valid as long as we are holding the 3rd of February low. So below that level, the yellow scenario is formally invalidated. And how does that look like? So in the yellow scenario, we have a wave 4 low in place on the 3rd of February. Wave 1 to the upside, wave 2 to the downside. So that is a so-called 1-2 setup, which should lead to a third wave rally. This third wave is considered an ABC structure, of which the A wave is now unfolding as an ABC structure. Okay, so it's quite complex, but an A wave can be an ABC structure. That was sort of the thesis I presented in the last few days. And the A wave might have topped. The B wave here might have indeed bottomed, and now we are rallying higher in the C wave. Earlier today on Discord, I already highlighted what the levels are to watch. The C wave target, the 100% Fibonacci extension at $2.91 is a common target for a C wave. The A wave, same length as the C wave, $2.91. So it's an area to watch. From here, if we get a pullback, it might be the B wave. And as long as pullbacks remain corrective, we can watch for a C wave rally afterwards, which might then take us not only above the 2nd of March high, located here at $3.04, but also above the 340 area, the all-time high. Okay, so this would be a scenario to watch. The price did react to the support area, so there's at the moment no reason to let's say remove this scenario from the chart. There is no reason to change it or anything. Okay, so this basically played out as expected, because remember that we were watching either the yellow count or the white count, and the white scenario moves together with yellow for now. The white count is a triangle pattern, which also would allow for an upside breakout. I really just show it for educational purposes. In reality, there isn't really a great change between yellow and white. So in the white count, the initial decline was an A wave. Then we had a B wave to the upside, a C wave to the downside. This is now also a D wave up, which would also be an ABC structure. So you will have difficulties to really distinguish between the yellow and the white scenarios. And then this would be the D wave up. Then we can get an E wave down, and we have pretty much that triangle, a series of higher lows and lower highs. That's what a triangle is essentially from an Elliott wave point of view: A, B, C, D, E, and then up. Okay, that's sort of what we're tracking here as well. As you can already see, it will probably be difficult to distinguish between the yellow scenario, which is a diagonal, and the white count, which is a triangle. In both of these scenarios, it seems like we're currently moving up to complete a corrective rally. ABC, whether that's ABC in wave D or ABC in wave A, doesn't really make a great difference. And then afterwards, there should be a higher low, and whether that's the B wave or the E wave also doesn't really matter. It's both valid as long as we're holding above the 11th of March low. That is the next invalidation point. I can actually already remove this Fibonacci support zone. I'll leave it for now, but we'll probably remove it later from the chart. And the invalidation point then, because in the third wave, we don't want the price to break below the wave 2 low, right? That's the invalidation point then at $1.90. But once we have a local top in place, we can add the next Fibonacci support area, like we did here, where the price reacted to the 38.2 retracement. We're now pushing higher. That's also a scenario that I'm tracking, for example, for ADA on the ADA chart. And some charts, but nothing impulsive. I mean, all of this, good to see that we see some green candles. I mean, not unexpected. Clearly, the price reacted to Fibonacci support, but it's far away from a breakout confirmation to the upside. This is still all in a range. We've seen movements like these before here, but overall, as I said, against these two levels I mentioned, the focus is still on higher prices. It would require a break, first of all, below the wave 2 low at, yeah, $1.89, 190, followed by a break below the 3rd of February low to confirm the blue scenario, which really doesn't make much sense. And at least from a wavecon point of view, while it's still valid, it has become far less likely now with that push higher as well. And it is not a scenario that is my primary expectation. Okay, so it's the alternative scenario for now. And yeah, it's looking good so far. It's following currently the forecast, but bear in mind we're only still in a range, and there can be a lot of things can go wrong still. What I highlighted is that the next upside target is 265 and then 291. So we're already entering that zone. It would be best to get to 291 here. That would look best in. Keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much.